Commercial real estate videos are brought to you by Bull Realty. When your business requires proven performance, contact Bull Realty. And by Arnold Golden Gregory, France Media Inc., Resnick Group, and Andy's Army. Welcome to America's Commercial Real Estate Show. Thank you for joining us to lead, learn, and laugh. Learn market knowledge and best practices to lead your company's success. And that's whatever type of company you work with. And let's have some fun along the way. Remember, if you have any questions or comments related to this show or about any commercial real estate endeavors, please give us a call, 888-612-SHOW. You can also email us at info@creshow.com. You can also connect with us on Twitter. Our show Twitter account is @CRE_show. Well, hello, I'm Michael Bull. Thank you for joining us. You know, the Commercial Real Estate Show has once again assembled some of the brightest minds in the industry, this time to discuss the status and expectations of the hotel and lodging industry. First, we'll get an update on market performance, and we'll look at the trends affecting the industry and the future of the sector. Please welcome my first guest, Mark Woodworth, President, Colliers PKF Hospitality Research. PKF manages an extensive database of hotel property income statements and sale prices. The data provides a foundation for e-business product and custom research relationships. Mark, welcome back to the Commercial Real Estate Show.
Michael, thanks for having me. It's great to be here.
Well, I sure appreciate you joining us today, and we'd like to get an idea of what's going on in the marketplace, and what are current national average occupancy levels and average daily rates around the country right now, Mark?
Two or three key thoughts, Michael. Number one, first and foremost, they're higher than they were a year ago, so we're moving in the right direction. And importantly, the pace at which the industry continues to move towards full recovery continues to accelerate. We do think the industry overall is going to end up with an occupancy of just above 61%, which is very, very close to the long-run average for the total U.S. Lodging market.
That's great. So what was it a year ago?
A year ago was about, as I recall, about a 1.5 lower than that. Right, we ended up, according to Smith Travel Research, right at 60% for 2011.
Okay.
But the real key is in most commercial property types, it's occupancy is important, but more importantly, what price can we get for what we're renting?
Show me the money.
Show me the money. Show me the money. And the good news, more and more domestic consumers have been, in fact, showing more and more money in terms of their willingness to pay for hotel rooms. Last year.
Don't tell my wife that, right?
I won't.
No,
well, Michael, the places you go, I'm sure they're really expensive. So,
where she goes,
they're getting more.
Yeah.
There you go. So forth. But again, to benchmark it, if we go back all the way to 2009, the average hotel in the United States, according to Smith Travel, experienced a year-over-year decline in their average room rate of just about 9%, which was by far the worst contraction our industry has ever seen. The good news that began to turn around, it leveled off in 2010. We saw a nice, according to Smith Travel, 3.7% increase in rates that year. As I mentioned, we continue to move in the right direction. Our current forecast calls for room rates to grow by 4.2%, and then to have that number continue to increase pretty much for the foreseeable future. So we're at a great point. We've clearly come off the bottom, and the sailing looks very clear as we move forward.
Okay, so you expect performance to continue to improve?
Absolutely. I think the critical part of that too is to go back to the room rate idea, is that that extra dollar of revenue associated with that higher room rate is 90% profit. So in terms of impact on bottom line profitability, for the last 2 years now, we've seen double-digit increases, and we expect that too to continue for the foreseeable future. So
Okay.
It's a great time for hotels.
Okay. And which types of properties are performing the best right now? Is it the high-end hotels? Who's doing well?
There is a pecking order in terms of who's doing better than others and so forth. And one of the things that's been very different about this particular episode is, unlike prior cycles, it was the higher priced hotels that began to recover first. Luxury, upper upscale hotels, think Hyatt, think Hilton's, think Marriott's, as far as brands that fall into that category. And that, like I say, the room rate increases that they've seen have far outpaced the industry averages. Some of the listeners might find interesting the fact that from our research, what we know is more important to the health of upper priced hotels is things like corporate profits and real personal income levels. Conversely, if we look at lower price lodgings, think of economy, budget-oriented hotels and so forth, their success is really driven by changes in employment. And as we all know, employment has been a real issue, one that continues to be a top-of-mind problem for most market participants anyway. And so that has been a drag on the industry. But again, a nice rule of thumb today is the higher your room rate, the better you're probably doing.
So the economy hotels are still possibly struggling in some areas.
Absolutely, and that's fairly common as we look across the industry, and particularly we as a firm focus on 50 of the largest domestic markets as part of our forecasting efforts, and it's very, very consistent as we look across the vast majority of those markets that, again, where employment continues to be a problem, the lower price lodgings have yet to even come close to recovering.
And how are the lenders looking at this market? Are they comfortable? Do they believe that the market's continuing to improve? Do they have some confidence when they're out there providing financing for these properties? Do they believe you?
I like to think they do, but I guess the proof is in the pudding, and looking at their actions. And there's no question that more lenders have an interest and a confidence in where the industry is today, and importantly, what the future holds. How does that compare to what we saw prior to the onset of the Great Recession? Like most real property types, it's a fraction. There is confidence that hotel incomes are continuing to grow, but the level of uncertainty that surrounds most businesses is such that willingness to make a long-term commitment, which obviously is what a lender is doing to a borrower, there's still a lot of reluctance here. Very, very careful as they return to the marketplace.
So you expect to continue to see some distressed market activity then in the hotel sector?
Yeah, I think so. Like on the residential side, there's still a number of hotels that are underwater, and folks, that many investors still take the attitude that the equity remains in the debt, so to speak, and so you can still find some of those types of opportunities out there, but they're becoming harder and harder to uncover.
Okay. And talk to us about that transaction activity. What's selling and how much activity are you seeing? Are people realizing that this is the time to buy a hotel? What do you see there?
I like to think the more sophisticated market participants, I'm sorry, Michael, have a high level of confidence in terms of where we are and, again, where are we going. The volume activity this year is flat relative to where we saw a year ago in the industry. So we don't expect to see much more this year. Probably will pick up next year. But again, until the lending community gets a little more comfortable of making debt capital available to the marketplace, we don't think we're going to see a big uptick. That should begin to surface, I would think, at least by the back half of next year.
And where are you seeing the most transaction activity? Is it the resort hotels, the high-end hotels? What do you see moving?
Top 25 markets. In fact, more let me refine that. I'd say really top 10 markets is where we've seen the bulk of the activity for the past 18 to 24 months now. And the reason for that is a lot of those markets have recovered. A lot of the assets that are in those markets are large, difficult to replace type hotels. So there's the comfort of, demand has begun to come back. And then an important part of the equation, too, is what's the likelihood that someone's going to build a hotel across the street from me and start taking food off my plate. And there's an extremely high level of comfort that there's very little new construction activity in all but a handful of markets around the country. So again, from a position of getting ready to make a long-term capital commitment to a particular location, for many investors that they're seeing that demand trends moving the right way, profit levels are continuing to increase. They don't have the volatility that comes with new supply coming in my marketplace. So the component parts are surfacing and are present in many markets that signal it's a great time to be buying. But again, on the capital market side, there's this reluctance with all this uncertainty, to make that long-term commitment.
Right. So it sounds a little bit like the other sectors. There's a real flight to quality, and that's where you're seeing the majority of the transactions.
I think that's a very fair statement.
Okay.
Absolutely.
And what about cap rates right now for some of the various property types? What do you see?
Generally speaking, we're seeing trends that are in keeping with history, and that is there is a cap rate premium for the bigger full-service oriented hotels relative to more economy limited service properties where there is a perception of greater levels of risk for that property type. I'm really reluctant to throw out a hard number to be indicative of either property type, because that can vary significantly as we move from property to property type and market to market. I will say, as we think about investor mindset and attitude, and am I making a bet on the future, or am I making my bet principally on what happened yesterday? There's that pendulum that does swing as we move through cycles. The pendulum has gone from I'm way up on the left, stuck on I'm only going to buy into the trailing 12 NOI for this property, to we've now really migrated more towards the middle, where I'm going to put a lot of weight on the demonstrated earnings potential of this particular property, but I'm going to start giving some credence to the month and the year ahead. So again, as we look for signals or milestones along the road to recovery, we're seeing that investor mindset beginning to migrate more and more towards, let me bet on the future, as opposed to rely strictly on what's happened in the past.
Right. Okay, good point. It sounds like it is a good time to buy hotels, and we'll get some more information for you, more intel, and more guests joining us about the hotel industry after a quick break. I'm Michael Bull, and this is America's Commercial Real Estate Show. We'll be right back.